Bill, the Fed chair said we're committed to getting inflation back to 2%. How committed did he sound in that news conference?
I don't think he's changed the story at all. I think what people are a little bit flummoxed by is the fact that the Fed sees stronger growth, a little bit higher inflation, yet the same number of interest rate cuts penciled in for 2024. I think the reality is it almost flipped. I mean, one more person had moved their interest rate forecast up, it would have been 2 rate cuts as the median rather than 3, and people probably would be interpreting this in a much more different manner. I think, Powell's confident about a couple things. Number one, that inflation is coming down. Number two, that that the labor supply is increasing, and that's creating slack in the labor market. And three, that monetary policy is tight. And that's why he's confident that eventually he's going to cut rates. It's just a question of timing.
Bill, do you think that there's something incompatible about shifting upward a growth target, shifting upward a targeted PCE for the end of the year, and even shifting up just slightly where rates are going to be and saying the story hasn't changed, that the inflation target is still the same, it just might take a lot longer?
I think what people, misinterpret is the summary of economic projections is not a Federal Reserve forecast. It's not Powell's forecast. It's a collection of individual forecasts. And the Fed doesn't coordinate the S&P. They're not trying to, go out and ask people to write down certain numbers to tell a certain story. It's just a collection of individual forecasts. And as we see in this case, one dot moves, you have a slightly different story. So I think that Powell's basic message is that the underlying story hasn't changed. We didn't completely buy into how good the inflation numbers were in the second half of next year. We're not completely put off by the bad inflation readings in January and February. We still think monetary policy is tight. We still think we're going to get more confident about getting inflation down to 2%. And so we still think we're going to cut rates this year. Timing is uncertain. And he said over and over again, it depends on the data.
Bill, not all dots are created equally. Where do you think Chairman Powell is on this story right now? Because it just seems to me there is a bias to cut interest rates. Steve Risciuto of Missouri came on this program in the last week or so, and he said this Federal Reserve wants to cut interest rates. Chairman Powell wants to cut interest rates. Is the bias to cut, regardless of what the data looks like?
I wouldn't go as far as to say the bias is cut no matter what the data looks like. I mean, the Fed's still committed to trying to get inflation down to 2%. But I think what's driving Powell is the fact that he thinks that monetary policy is restrictive. So if you stay at the current setting, the economy will gradually slow, and that will set the stage for less strength in the labor market, which will then motivate cutting interest rates. That's what he's highly confident about. When he got the question today about financial conditions, he showed no concern at all about financial easing and making the economy too strong. I thought that was noteworthy because in the past, he's talked about financial conditions a lot as an important way that monetary policy gets transmitted to the real economy. But this time, he did not take the bait on financial conditions easing. And of course, when he doesn't take the bait on financial conditions easing, what does it do? It causes financial conditions to ease more.
It's a green light to buy stocks. That's exactly what's happening. The S&P 500 at all-time highs and up another 0.8%. Bill, we often hear that we're restrictive. And there are some people that come on the program and push back against that exactly because stocks are at all-time highs, credit spreads are very tight, and unemployment is still below 4%. What do you point to if you were back on the FOMC just to demonstrate more clearly to people as to why this FOMC believes we are sufficiently restrictive?
Well, first of all, the economy does seem like it's slowing. I mean, we grew 4% in the third quarter, 3-something in the fourth quarter. It looks like we're going to get something like 2% in the first quarter. And there are signs of weakness. I mean, if you look at industrial production over the last year, it's actually been down. If you look at hours worked, they've been soft. So I think the Fed is getting enough evidence that the economy is slowing that gives them confidence that monetary policy is actually restrictive. And of course, as loans mature, they get repriced at higher interest rates. And so, as time passes, you stay at the current level of interest rates, that's going to exert more restraint because it's going to drive up financing costs for a lot of smaller businesses and for consumers.